Hello, traders. Welcome to another daily analysis and happy 2017 to everyone. Today is Monday, and we are right now about 40 minutes into Tuesday. So, today, of course, is a new year observed, so it's not really a trading day. The most banks are closed. Stock market is closed, but of course, currency market is always open. Nevertheless, I still did a brief analysis just to give you sort of outlook for what's coming up for this year and what's coming up for this week. So first of all, I hope everyone had a great 2016 and hope you had a great New Year celebration, or at least took the last 2 weeks off to really rest and enjoy yourself. I didn't do much, and I actually got a quite nasty cold, so I actually caught a flu, and that's why I apologize. Maybe my voice sounds a little bit weird, but I'm still recovering. So really, I pretty much really just rest because I needed it. Other than that, it's a very good start of the year. Everything is very good so far. So let's take a look at what lies ahead of for 2017. So this year will be another exciting year with many global events to basically shake the financial market. So one thing for sure is that there will be liquidity, and that's what we are looking for as a trader. And that's one thing also understand very importantly is that for traders, we can always profit in both ways. You can always profit up and down, and that's why the most important thing for us is to have an up or down. The one thing that we don't want is to have no direction. So that's why when I say global events, it might be good one, might be bad one, but nevertheless it's going to provide liquidity, and that's what's good for us. So first of all, Donald Trump will be sworn in officially in January 20th. And then what's going to happen is that everything he has said and done or planning to do will become policies. That means that things will become a reality. Whether you like him or not like him, it's just going to shake up the political situation in US and globally. So we will looking forward to see the effects of it. Of course, he also has a lot of enemy, a lot of opposition. So that's all gonna create a lot of, again, a lot of liquidity for the financial market. So January, it's also already very excited because of that. The two major elections in Europe this year, from Germany and France, those are also another political events that will basically shake the world and the financial market. Now, back in last year, of course, people would think that Angela Merkel is going to win again, and the French nationalist movement will probably not succeed. But as you already saw what happened in the Christmas market last week, just to show you that how unexpected things can happen, and if we have more and more of this kind of terrorist attacks in Europe this year, especially in Germany, then really nobody knows who is going to win. And if Angela Merkel does not win, then that's really a big shuffle for Europe, and that's really going to affect the financial market greatly. So that's again another two major events for Europe. Another one is Brexit, which will be the headlight for 2017. As you know, 2017, they are going to officially trigger Article 50. Now the negotiation and everything will finally become a reality. And to be honest, I don't know what's the future, and I don't think anybody knows what's the future for UK. So of course, you're gonna read a lot of analysis, and they're all very sounding, very logic. But the truth is that nobody knows how this thing is going to pan out. So it's really, for me, it just says it's uncertain, right? I don't really like to predict because I don't know, and I don't think anybody knows exactly what's going to happen for the Brexit. So that's already a few major events in Europe and US. Another thing is the Chinese, U.S., and Russian relationships continue to be uncertain. As you know, that after the Donald Trump got elected, he already had a lot of fuel up with China, and now the Obama already sanctioned the Russian official, which is providing to be another political event with Russian, the geopolitical event. So it's all a lot of foreign matters that need to be solved between these three strong, powerful nations. Now, meanwhile, the Middle East relationship are also uncertain. We have agendas on Israel within the Palestinian settlement issues and the Iran nuclear agreement. So, and also the Saudi Arabia, because the U.S. has passed the law last year where the victim of 9/11 can actually sue Saudi Arabia and the royal families. So those are all providing to be relationships that is going to be uncertain for the Middle East and US. Now the oil market also remains to be uncertain as the OPEC agreement is going to take effect this Saturday or Sunday, and that's going to see whether they can really curb the output and whether they can really boost the oil price artificially. So we were going to see how the oil market is going to perform, and again, that's also something that's uncertain, and that's something also going to be providing a lot of liquidity. Emerging markets continue to be uncertain, the fate of the new U.S. leaders and many global events. Gold price also expects to be ups and down. Now, overall in 2016, the gold price was up, I think, 8%. So it's again expected to be ups and down because you have a lot of progress for the global event. So it's going to be up and down depending on what happens to those events. The global terrorist attacks also continue to be issues nationally and domestically. So just looking at these few simple events that we have now, you can pretty much say that 2017 is going to be, again, like I say, an excited year because of the events. Now I say excited, I didn't say positive. So again, these events can be positive, it can be very negative, but nevertheless, it's going to provide a lot of liquidity for the financial market. So, for the major view, for the 8 major currency, Euro, I think, continues to be weakest currency fundamentally, from my point of view. And the reason is because the ECB easing is going to last until December, as what they said last year. While the populist movement have shaken the structure of the Eurozone and its future. So this increasing terrorist attacks and nationalist movement will further divide Europe. Now on top of that, their economy is not doing particularly well. The easing continues and they are facing the increasing interest rate and the strong US dollar, which means that really no fundamental reason for any investors to hold euro. Most people, if they want to hold any currency, will certainly not be euro. So that's why fundamentally euro is not a strong currency. It's perhaps the weakest currency in my point of view for 2017. And that, of course, will change depending on the outcome of election on Germany and France. So we'll have to see what's going to happen for that. Now, US dollar is going to be the main star, continue for 2017. Now, the economic stimulus is very clear, as you already saw a lot of policies that's going to come with the Trump government. So it's going to be quite stimulus for the U.S. economy. They're going to roll back a lot of regulation on the financial market, tax cut plan. The rising employment data, inflation all signal a very good year ahead of U.S. And also the Federal Reserve also signal they are going to raise interest rates further because the inflation is going to pick up. So that's all very good for US dollars. Of course, there's still some risk. First thing I say is the foreign affair. Now we're going to see what's happening between US and China and what's happening between US and Russia. So those are two major factors, and also what's happening between US and the Middle East affairs. So those are all the foreign conflicts. Now, civil matters also is a big issue, especially in the racial and gender equality, which divided the nation further. So you are expected to see some protest going on after Donald Trump sworn in. So that's also going to be a domestic issue. But nevertheless, a currency's perspective or financial perspective, it is going to be a quite good year for US dollar and the stock market in the US equities. For British pound, as mentioned, it's going to be a roller coaster year for UK because everything is extremely uncertain. It's all tied up to the negotiation of Brexit with Eurozone. And now Eurozone itself is not clear because the two major players, France and Germany, might be shuffling their leadership. So that's why, it's all going to affect UK. It's all going to affect British pound. So for me, I really don't know where the UK is going to go. And that's why British pound is really remain to be uncertain. Now, of course, when you have a currency that is uncertain, that generally means it's more negative. So I do hold more a sort of bearish view toward British pound because of the uncertainty. Now, Australian dollar, as you know, China was doing very well in 2016. Now, regardless, you have a lot of issue in growing debts, asset bubbles, capital outflows, things like that. It's all happening, but Chinese economy was still doing very well in 2016 and is expected to continue outperform many other nations in 2017. Their debt issues is really prominent, and they need to solve that ASAP before it become a really huge issue, like what happened in Japan back then. But as for now, and also the main thing is that their government has absolute power to exercise a policy. So it's relatively fast for them to change things because they are not a democratic country. So for them to really change direction, it's really just a snap of a finger. Now the government, the elite group, have to be smart enough to guide the nation to the right direction. So that's why people will actually think, especially after US pull out from the TPP deal, you see that China start playing a main role in a lot of issues, especially in the climate change. So it's really looking quite bright for China. And as long as they are doing well, that's also going to benefit Australian dollar. So Australian is expect to be a very good economic year in 2017 because of Chinese data. So as long as China continue to perform expectedly, then we will expect to see Aussie to continue be a strong currency. The only risk, of course, is the housing market in Australia, and also you of course have the commodity speculation, which on some time to time will play a huge effect. So, but overall, for a micro view, I think Aussie is going to be well for 2017. Now, New Zealand dollar is in a similar position as Australian dollar. It is benefit greatly by China and the rise of the global dairy price. Now, the RBNZ still has possibility to cut interest rate, and the economy and inflation are still low. But in comparison with other nations, it's still a very good economy overall. Now, one thing you have to watch out is that when I say Australian dollar and New Zealand, it's really that you have to, if you want to buy these two currencies, you have to buy against other currencies. So don't buy any currency against US dollar. And you might read news saying that Aussie dollar, New Zealand dollar all drop significantly, things like that. It's very normal because none of the currency has enough power to face US dollar. That's why if you pick Aussie head-to-head with US or New Zealand head-to-head with US, it is going to be a losing battle. So you have to pick Australian dollar or New Zealand dollar versus some other weak currencies, and that will provide you with a better chance. What's the weak currency beside Euro dollar? Of course, it's Swiss franc. Now, Swiss franc really isn't much to say about Swiss franc because the agenda of SMB is still the same. They maintain the outlook to devalue their currency. They maintain the outlook to really help in the export business. And as you know, in 2017, there will be a lot of political events in Europe. So that's going to play a lot of safe haven effects for Swiss franc. So the SNB still maintain the same agenda, which means they are going to intervene again and again to protect their currency being overbought. So the view is quite negative again for Swiss franc. Now for Japanese yen, it's exactly the same situation as Swiss franc. The safe haven effect is way much larger. But however, the news from Bank of Japan last December was quite positive. They actually considered to raise the interest rate in the near future. But as for now, it is still in the easing cycle, so it's still a quite negative currencies. Last but not least, Canadian dollar continues to be neutral on our list. Now, the central bank said that the outlook is neutral. As you read from 2016, they say they are not looking to do anything about interest rate up until 2018. And so it's really, internally speaking, domestic speaking, economic wise, Canadian dollar is really neutral. And that's really going to put the effect to the oil market. So the Canadian dollar is really going to go around with the oil market. And we will have to see what's happening to the oil market in 2017 and whether the OPEC agreement is really going to work or not. That's pretty much it. So, the view actually is relatively the same as December 2016. We're still bullish in US dollar, and Australian dollar and New Zealand dollar comes as second. And again, remember to buy them against other weak currencies. So basically, don't buy Australian dollar and New Zealand dollar against US dollar. And weaker currencies still remain to be Euro, Japanese yen, and Swiss franc. And that's really just the view. And the Canadian dollars continue to be neutral around the oil market, while British pound continue to be bearish fundamentally, but depend on the progress of the Brexit. So really pretty much very, very similar to 2016 December. And that's very normal because really nothing has happened from the last couple of weeks till now. We're just at the beginning of this year. So that's pretty much my outlook for 2017 for now. And just to understand, everything can happen. So really maintain a quite open mind is the best strategy to trade. This week, the main risk events. So Tuesday, tomorrow, we have a manufacturer PMI from British pound. We're really looking for a negative surprise to sell against US dollar. GDT price from New Zealand dollar is also coming out tomorrow. If a positive surprise, you can buy against Japanese yen, you can buy New Zealand yen. If it's a negative surprise, you can actually sell against US dollar. So you can sell New Zealand dollar. Now, there's no expected number. So what I generally do is to pick the last 5 number. And if anything that is within a range or better, that's considered a positive surprise. Let me show you what I mean by that. So let's just say if you have, the last 5, it's 1.4, 11, 4.5, 3.5, and minus 0.5. So for me to consider negative is anything negative 0.5 or below. So if I see any number below this, I'll say that's a negative surprise. So for me, I will sell New Zealand dollar against US. Now, for me, positive surprise will be anything above 11.4%. Now, the reason, again, because we don't really have a forecast number for this. So for me, that's how I trade when I don't really have a forecast number, is I pick the last 5, the largest one and the smallest one as my deviations. US manufacturer PMI also a good risk event to trade, but again, only if you have a positive surprise, then you can buy US dollar against Japanese yen or euro. Now, Wednesday, the construction PMI from British pound is another event to sell with negative surprise against US. So as you can see that I'm really only looking to sell British pound, really looking to sell cable basically upon a negative surprise data from UK. You also have a FOMC meeting minutes in the afternoon. Again, you can trade with hawkish statement to buy US dollar. Thursday, we have service PMI from British pound. This is actually the most important PMI to trade, as you know that the service industry is 70% of GDP for UK. So looking to, again, sell upon negative surprise against US dollar. Now, US non-manufactured PMI also out on Thursday. Again, you can trade with positive surprise to buy against Japanese yen or euro. Crude oil inventory will also come out on Thursday. Of course, the really big events for this week is Friday's non-farm payroll, average hourly earning and unemployment rate. And of course, we're looking to buy with positive data. And also the Canadian employment data is also coming out at the same time. So a strategy is to buy US with positive surprise against euro or Japanese yen. And for Canadian dollar, because it's neutral, so you can either sell or buy depend on the result. If you have a negative surprise, you can sell Canadian dollar against US dollar. But that's only if the US data also is positive. So if you are not sure if the things come out too fast at the same time, you can actually sell Canadian dollar against Australian dollar if you want to do that. If the data is positive for Canadian dollar, you can buy Canadian dollar against Japanese yen and euro dollar. So that's pretty much the risk events that is tradable for this week. And I forget to type the number below, so I will do it later on after this video. I will type it in so you can take a look at a sheet on my website. So I will have the deviation number here. So let's take a look at the daily chart. So this year, basically my strategy is relatively the same, but I'm really going to concentrate more on daily trade and really use my time on other things more. So basically I'm going to trade, I'm still going to do a lot of analysis, but my actual trade is really going to tie around either daily candle, daily trade, or risk events. This will be my two strategy to focus on. So I'm not really going to do session trade anymore because it's just not that productive for me personally, and that's why I don't really have too much winning rate or ratio. So it didn't provide too much good result in 2016. So I decided to really, just pick the strategy that has been working well for me. So focus on daily and risk events, trading with surprises. So let's again take a look at 28 currency and see what we have today. Just give me 1 second. Okay, so first, let's take a look at Euro Pound. So as you can see, what happened to Euro Pound after the last 2 weeks, again, like I mentioned, it's really a range bound. You do have this kind of spike movement, but then it goes down. And if you ask me, was there any fundamental reason or risk events? Not really. And as I mentioned, that the last week of December is always going to be kind of weird because most traders are wrapped off already. That's why if you trade in last week, which I don't recommend, it's really you're going to have a lot of irregular price action that has nothing to do with the fundamental data. So that's pretty much what happened in Euro Pound. Like Euro Swiss, just give me 1 second. Okay, I cannot pull the Euro Swiss chart for some reason. Okay, let's take a look at Euro Dollar first. So Euro Dollar, again, same thing. You have a large spike up to 1.0650 and down. So it's about 200 pips movement without any particular reason. So that's pretty much what happened. Again, the last few weeks of December, last few days of December is always going to be like this. So really, I don't take too much consideration of what's happening here. It's really not significant. I wouldn't say, hey, what happened here? Okay, because it's thin liquidity. So it doesn't mean that, it doesn't mean anything basically for me. But nevertheless, still good to take a look at it. Now, Euro New Zealand, same thing, pretty much a range bound for last week, and Euro Yen. Take a look at Cable Swiss. Same thing, you have a dip and then goes up. You look at Cable. Cable is more predominant because you start dropping after the Federal Reserve raised the interest rate in December 14th, and now it's really you are basically broke down this range area 1.23, and right now you are just below this range area. So of course, like I said, and the micro view is downward for British pound. So that's pretty much what's going to happen for British pound for 2017. Pound Aussie, it's a range bound. I'm sorry, I rephrased that. That's pretty much what's going to happen in cable in 2017. But in terms of what's going to happen to British pound, it's really, we don't know, because it really depend on what happened to the pre-exit and the negotiation for Article 50. Pound Newsy, same thing, it's quite range area, and Pound Yen, it's also range area. Swiss Yen, same thing. So really nothing much happening for the last few days of December. Again, you have this large dip and goes up again without any reasons at all. Excuse me, just gonna drink a water. Slowly losing my voice, I apologize for that. But let's keep going. Dollar CAD. Again, CAD actually regained a lot of ground in the last few days, as I read in the articles. And really no significant reason, but I think people might placing in a bait for the oil market because the OPEC agreement is going to take effect on this Saturday. So people are taking a bait, price in for a higher oil price. Now the yen, again, nothing much happening. Ever since we reached, the new high of 118.66, now we're just really drifting down. But it does look like it's gonna continue to go up. And when I say new high, I'm only mean new high for this recent month, because if you pull out the chart, you still have a lot of room to go, all the way to 127. That was in last year, 2015. So, and let me see historically. Yeah, about 127. That's like, the past 10-year high. So you can still a lot of room to go, basically, for dollar yen. Another 1,000 pips. Right. Aussie Swiss. See, Aussie dollar continue to drop. There's really nothing happening to Australian dollar. It's just really the effect versus US dollar, which really dragged the Australian dollar down to the bottom. Which again only means one thing for me, is that it's going to be a great chance to buy Australian dollar. And if you want to buy it, and of course buy it at the dip, it's the best way. Aussie Newsy, and again same thing, it's pretty much looking downward for Australian. CAD Swiss, really nothing too significant. CAD Yen, cancel this line. UT Swiss, UT dollar, and UT CAD. Sorry, UT CAD and New Zealand yen. Yeah, so that's pretty much it. Just to show you, really, just to show you how most pairs react pretty much the same for the last few days of December, and there's really no fundamental news or risk events happening in the last few days. So really, if you were trading, just be careful, because everything is going to be quite irregular. It's going to be up and down. So I didn't trade, and if you did, hopefully it turned out well for you. Otherwise, concentrate on the new year, and we can make some peeps this week. And that's it, guys. I will be back tomorrow and officially start our daily analysis, the first trades of our 2017. And again, strategy is pretty much the same. Going from fundamental perspective, technical wise, really just concentrate on daily. and risk events trade. I'm pretty much also going to maybe widen up and taking this kind of breakout trade, providing if we have a very good fundamental data. So really just let the fundamental drive the whole thing and use a very simple technical analysis. And that's it for now, guys. If you have any question, again, I apologize for my voice. It's kind of losing it. But if you have any kind of question, feel free to ask me or comment below or just let me know. Otherwise, I'll be back tomorrow with our regular daily analysis. And again, happy 2017 and wish you a very, very good year ahead of you. Thank you very much for watching. I will see you tomorrow. Thank you very much. Bye-bye.